Have any feedback you'd like to share, get in touch through the contact form at destinysurvival.com or email me directly at destinysurvival@gmail.com. What is Splitting Pennies all about? Here's a book summary. Splitting Pennies, Understanding Forex is a book about our global financial system and its direct impact on every human being on this planet Earth. Every day our money is worth less and less. Splitting Pennies explores why through the prism of its mechanism, Forex. Forex is the largest business in the world and the least understood. This is not taught in schools. Start your journey and just read. Splitting Pennies displays practical examples of how many have profited in Forex, the history of Forex, and practical examples of strategies to use for your portfolio. Readers of the book will know more than a Harvard MBA about Forex and can consider themselves sophisticated Forex investors, SFI. Complex topics such as currency swaps are broken down in digestible form for the average investor or for financial professionals. Splitting Pennies is a must-read for those in investment banking, securities, fund management, accounting, banking, finance, and related fields. But it's written for the layman, the worker, the average investor, the student in us. About my guest today, Joseph James Gelet was born in Anaheim, California in 1980 and grew up bicoastal in Southern California and Boca Raton, Florida. His interest in computers led him to electronic trading and algorithm development. When there was no program trading or algorithmic industry to speak of, Joseph Gelet has been trading since 1996. He began day trading equities during this time and was always on the cutting edge of algorithmic electronic trading. Joe Gelet has an impressive set of credentials and accomplishments, including starting a company called Elite eServices in 2002. I'll skip over a few key points here, but I'll put all the bio information he sent me in my blog post about today's show. Mr. Gelet is a well-read author. He's authored 2 books on the topic of Forex, as well as countless articles, both in leading print and online publications. Always staying on the cutting edge of algorithmic electronic trading, he recently pioneered the first binary options Forex robot available in MT4 format. He also is an expert Forex consultant to Steinmeier Law, a leading securities class action antitrust litigation firm. He holds a Series 3 license, Commodity Trading Advisor, and has developed an in-depth Forex training course which has helped many Wall Street professionals and international investors understand the nuances of Forex. Mr. Gelet has been the Forex and IT consultant to many FCMs, FDMs, banks, hedge funds, and universities. Due to the overwhelming amount of fraud and unscrupulous practices in Forex in the United States, Elite eServices decided to withdraw from the NFA in 2014 in pursuit of opening a Forex bank. Joseph Gelet lives in South Carolina with his wife. Visit his website at www.splittingpennies.com. And here's a bonus for you. Every owner of Splitting Pennies is entitled to receive their free unlimited copy of Penny Splitter Expert Advisor, a fully automated algorithm designed specifically for the foreign exchange market. Now, if you're still with me through all that, I know you'll want to hear what Joe has to say.
This is Destiny Survival Radio. I'm John Wesley Smith, and my guest today is Joe Gelet, and we'll be talking about his book, Splitting Pennies, Understanding Forex. Joe, welcome to Destiny Survival Radio.
Thank you. Good to be here.
My first question, well, before I get into my questions, I have to tell you that I'm probably going to ask a lot of questions that display amazing ignorance because this whole thing with money and investments and anything that smacks of anything like that tends to go over my head in a hurry. Sometimes I can grasp the big ideas, but sometimes not. And I'm just hoping that we can bring things down to earth for folks that are interested in preparedness and so on in such a way that makes sense. I'll tell you how my money management skills are. I was talking with a guy from church not too long ago. He was saying that if he had a lot of money, he'd probably just give it all away. And I said, my problem is I don't have a lot of money, and I still have to give it all away, to bills and that kind of thing. So, So tell me about this book. Where did it come from? How did you come about this book?
Well, I've been in financial services as a career for my whole life. I started trading at an early age when I was 16 and always was fascinated with the markets, and I'm a computer guy, and there's nothing more interesting if you're into computers than electronic trading, because you can buy and sell whatever it is, whether it's currencies or stocks, and it's just something I was always interested in. And I've been doing Forex since 2000, and we develop algorithms, so everything we do is 100% automated. The software trades the currencies by itself, and that's our core business. But since I've been doing Forex, people don't really understand what it is that I do, and it's not something that a lot of people know about, and it really impacts the value of our dollar. So every year our money is worth a little less and less, and that's because of Forex. It's not because your local shop is increasing prices. If you talk to any business owner, they'll tell you that they hate to increase prices because consumers don't like it. So that's why I wrote the book, to try and explain to people what it is, Forex, how the market works, and just trying to explain things using metaphors and on a level that everyone can understand, at least the concept of it, because it's not so complicated. But there's not like a class you can take on currency management. Even if you go into some Ivy League school, they don't have something like Forex education because it's such a new market. So that's the genesis of the book.
Okay, well, let's define what Forex is, if you can. You drop several little hints about it throughout the book, and I'm still not sure I've quite got it. It sounds like there's a relationship to information and to trends, and yet I'm not clear if this is an actual product or just what we're talking about here. So clarify that for me if you can.
Well, we use, in America, we use the U.S. dollar, and the U.S. dollar is created by a bank. It's called the Federal Reserve, and it's a central bank. And the central bank creates U.S. dollars that they give to banks, and then banks give it to people. And that's what you use when you go to Walmart or wherever and buy the things that you buy. If you're employed, you're paid in U.S. dollars. So it's a currency that everyone in America uses. And in different countries, they use their currency. In England, they use the Great British Pound. In Australia, they use the Australian dollar. And a lot of corporate America is an international business. So my favorite example is McDonald's, because everyone knows the company McDonald's. Actually, McDonald's makes more money outside of the United States than inside of the United States. They're very popular in Europe. Even there's 440 McDonald's in Russia. McDonald's is in almost every country in the world, and all that money, they actually make a profit in euros and British pounds and Swiss francs, and then 4 times a year they send that money back to the United States, and in order to do that, they must first go into the Forex market and convert their euros and British pounds into U.S. dollars, and that's Forex. Forex is an acronym for foreign exchange of one currency for another, and the rates are always changing. So just like the value of a stock changes on a daily basis, the value of the exchange between the U.S. dollar and the Swiss franc changes on a daily basis. So that's basically it. So what I do with my algorithms, I basically try and trade and speculate on rate changes, but for most businesses, they need Forex because in the case of McDonald's, they need to change their British pounds into U.S. dollars. So that's the reason why a lot of people who live in America and don't travel maybe aren't so familiar with it, because you just use U.S. dollars for everything. But Forex determines the value of the dollar. So every year it's a little less and a little less, and it's very slow. It's very subtle, so you don't notice it. But you probably remember prices of things when you were a kid. It was 10 times less than it is now, and that's because of the money market. Forex is essentially a money market.
Okay, so how does that affect the prices going up? I mean, why does everything continue to go up? Doesn't that reflect a certain amount of instability or something?
Well, what happens, imagine that you have a small community. You only have your neighbors and people you can see around you, 10 or 12 neighbors. And imagine all of your neighbors immediately received $1 million. What would the neighbor charge you to cut his grass? Probably $10,000 because they're so wealthy. So what happens every year, the Federal Reserve creates more U.S. dollars. So in the last, since 2008, the Fed created 20 trillion U.S. dollars. So you have more money chasing the same or fewer goods. So all of this money that the Fed creates then goes into the markets, which drives up asset prices. And I don't know if you ever heard stories about hyperinflation, but in some places like Zimbabwe and Yugoslavia and the Weimar Republic in Germany before World War II, they had situations where they created so much currency, inflation was so rampant that it would cost, imagine, $5 million to buy a loaf of bread. So we don't have such severe inflation, but basically what happens every year, the Federal Reserve creates more money, more physical U.S. dollars, and so the same amount of goods exist in the economy, and you just have more money chasing a limited amount of goods, because there's a limited amount of physical things in the world. There's a limited amount of cows that make milk and a limited amount of properties you can buy. But there's no limit to the amount of money that the Federal Reserve can create. It's unlimited. So they can create $20 trillion a day if they wanted to. So they're just constantly making more and more money. So this makes the value of the money less and less.
Okay. So let's talk about this creation of money. I know that there's a guy on one of our local radio stations here. He just cringes at the thought of anybody mentioning fiat money. But that's what we have, isn't it?
Yes. Yes.
So talk about what that is.
Well, we can't, it's not likely that the system is not going to change, at least in the next 5 or 10 years. Fiat money is a concept that fiat means by decree. It's a Latin word. I think it was in Roman times, but it's a Latin word that means by decree. So the U.S. dollar is worth, $1 is worth $1 because the Federal Reserve says it is. In other words, it's not backed by anything. It used to be, after World War II, there was something called the Bretton Woods system. So in the 50s, and maybe you remember they were still in circulation in the 60s, something called a silver certificate. And all U.S. dollars were redeemable in gold. So the idea being you could go into a bank with 1,000 U.S. dollars and get gold worth $1,000. So everyone in the world wanted to use the U.S. dollar because it was as good as gold. So, of course, everyone wanted dollars because they knew that the money would be valuable because they could always go into a U.S. bank and get gold for their dollars. So everyone used U.S. dollars. So what happened, Nixon decided that we're not going to use this system anymore because France basically asked us for billions and billions of dollars in gold. They said, okay, here's our $1 billion, give us lots of gold. It would have been, all the gold in Fort Knox, let's say. And so Nixon decided, well, we're not going to do that. So we defaulted on this agreement. And at that point, it was called the Nixon shock in 1971. Since then, we've used a fiat system, which means the U.S. dollar isn't backed by anything except because the U.S. government says that it's good, and it's just a standard. There's nothing behind it. So that's why this guy cringes, is because other systems of money that have existed throughout history have always been backed by something that gives them value, where the fiat system has no inherent value. So money is only worth as much as you can buy something with it now. You can't take U.S. dollars into a bank and get gold or anything. So that's why it gets less and less every year, because there's no limit to the amount of money they can create. They can create hundreds of trillions of dollars every day, and it would just, it's all electronic. So, and all currencies in the world are now fiat, because the U.S. has pressured other countries into using the same kind of system. So there isn't an alternative currently. It used to be that the Swiss franc was backed by gold, and in 2011 they decided to abandon that as well and manipulate their currency. So currently in the world, all currencies are fiat currencies. So the U.S. dollar is worthless, but the euro is also worthless. So it's not as if there's one currency which is better than another, which is why many investors like gold, because gold isn't something that you can manufacture out of nothing. So that's basically what the system we use now is a fiat system, and it's a situation that the U.S. is such a powerful country that it makes the dollar valuable because the U.S. is so powerful. So for smaller countries that have a fiat currency, let's say the Cayman Islands or Cuba or some small country, they have the same fiat system, but their currency isn't so valuable, so they will peg their currency to the U.S. dollar. So the U.S. dollar is sort of like a one world currency of sorts that many countries use to back their own currency. So it's sort of like a super currency of sorts. But that's how the fiat system works. It's just valued whatever that they say it is.
You make a statement that I think many would find shocking, but I completely agree with you. You say that the U.S. dollar isn't backed by gold, but it's backed by bombs. Can you clarify that?
Yeah, since World War II, there's been a very strange relationship with the U.S. dollar and the military-industrial complex that Eisenhower warned about. What happened after World War II, the only real superpower in the world was the United States. Even Russia was completely decimated. So the U.S. was really the only country that could help rebuild Europe and Japan and acted as the world's banker. And what's happened since then, there's been this situation that the most obvious example is months before the Iraq invasion of the U.S. military invading Iraq, the Iraqi government had switched to a oil for euros system, so they were selling oil for euros, and followed by that, their whole system was destroyed, and now they sell oil for dollars. And if you look at all the different conflicts since World War II, they've all been a function of currency, or at least the defending country has had some alternative to the U.S. dollar. And countries that the U.S. is very friendly with, let's say a country like Germany, actually uses the U.S. dollar more than their own currency. So, for example, the euro that they use in Germany is backed by the U.S. dollar. And they have special agreements with allied countries that they have special U.S. dollar funding arrangements and swap agreements that anytime they want, they can get an unlimited supply of dollars. And basically, it's not in the minds of the generals. I'm sure that they're not thinking like this, but there's a statistical correlation that all of the countries that have had conflict with the United States have had some alternative proposition for using something other than the U.S. dollar. So basically what the military is protecting is not oil. Oil is the common thing that people say that we're in Iraq because of the oil, which is true to an extent because oil is the most significant resource in the world. But what's most important to know is that we have a system created by Nixon with the Middle East, with mostly the Saudis and other Middle Eastern countries. It's called the petrodollar system. So we agreed a long time ago that they will sell oil only in dollars. So let's say you're Russia or you're China or you're any country and you want oil, because everyone needs oil. First, you need to convert your currency to the U.S. dollar, and then you can buy oil. So this provides a natural support for the U.S. dollar. So when the military is, let's say, invading Iraq or Afghanistan or wherever, yes, there's oil resources, but more importantly, there's an oil dollar system called the petrodollar, that supports the U.S. dollar. So the military is sort of protecting the petrodollar system. For example, China is an ally of the United States. They are the largest single user of the U.S. dollar in the world. They hold several trillion in U.S. government debt, but all of the investments they make are denominated in dollars, and that's part of the petrodollar system agreement, which is that we will protect the Middle East and China to a lesser extent, but the catch is they must use U.S. dollars, and they must invest in our stock market. They must buy dollars. They must use the U.S. dollar. And the Saudis are huge investors in the United States. They buy stocks, they buy bonds, and they enjoy the protection of the United States military and other benefits. And and Israel has the same agreement. Basically, that's our agreement with most countries. We'll protect you, and they don't pay us. I was listening to Trump talk about how all these countries don't pay us for their protection, but they agree to use the U.S. dollar. So even they're not paying us like a fee, by using the U.S. dollar, they are sort of paying us indirectly, because that's what keeps the U.S. dollar valuable. So it's basically an opportunity to do business, for example, buying Coca-Cola or McDonald's or American products, and it's a stable financial system. And practically speaking, there's no alternative. So all these countries have a very good deal because there really isn't any alternative. There's now the euro, but in the last 50, 60 years, the U.S. dollar has been sort of the only game in town. So it's been a good deal for them. So I don't want people to think that I'm saying it's a bad thing. That's just been sort of the politics of the last 60 years. There's been this correlation there. So that's what I mean by that. Certainly the people in the military aren't aware of this circumstance. But Nixon created Forex, and Nixon created the petrodollar system and opened up China and all these big markets, and they're huge markets. It depends on them using the U.S. dollar. I can guarantee you, if China decided to not use the U.S. dollar in favor of the yuan, trade with China would grind to a halt, and it could even be a reason for war. So that's a big important point that most people don't understand about why the dollar is supported. It's not backed by gold, but in a way, metaphorically at least, it's backed by bombs, because without the whole military in the system, it wouldn't exist. It wouldn't be possible.
Well, what do we make of the BRIC countries then? Are they trying to go their own way, or is this just sort of a faction in the bigger system, or what?
They are, but they're not really strong enough to independently support themselves yet. Russia and China have many agreements which are in between them, like exchanging energy for sale in rubles and yuan. But, for example, India, which is a BRIC, is completely tied to the U.S. India is probably the fastest growing and the most potent of the BRICS. And India is a complete user of the U.S. dollar and the United States system. So they try to go in parallel, but it's not like that they're creating an alternative which is going to be something that will end the U.S. system. It's just something that they're working with in parallel on their own accord, because they still rely heavily on the U.S. I mean, still the Russian ruble, for example, is backed by the U.S. dollar. So they don't have an independent banking system. They can't just flip a switch and stop using the U.S. dollar, and that's the same for all the BRICS. So they try to be independent, but not. I mean, the world today is a lot different than it was 50, 60 years ago. So today, countries are almost irrelevant compared to, let's say, after World War II, because trade is so global. I mean, Splitting Pennies, the book that I wrote and released, is on sale on Amazon, but Amazon sells it in 20 different countries. and it doesn't matter where I am. I mean, I could physically have written this book in Russia or Germany or wherever, and it's sold in every country in the world, and that's a common business practice of the modern world. So when these BRICS try to develop something, it's not as if they try to oppose the U.S. system. It's just sort of a natural progression because, remember, a lot of these economies are very new. I mean, Russia is a great example because Russia is only 20, less than 30 years old, depending on how whether you use a date of 1991 or 1998 when they defaulted. It's a very young country. So in China in the 60s and 70s didn't have automobiles. In Beijing, when Nixon went to Beijing, you can look at the photos, they didn't have any automobiles. There were no factories. They rode bicycles and there were just rice fields. So these countries have changed. Yeah, they've completely changed. But the difference is, in one way, they're very behind the times, but they had the advantage of help from the United States to industrialize in a more clean and effective way. So, for example, what we went through in the turn of the century, like around the Industrial Revolution time in 1900, 1910, 1920, there was a lot of pollution, there was a lot of inefficiency, there was a lot of social problems, and they basically have like a full package that they, for example, the technology in the factories is just unbelievable. Now they can build robotic factories and they can buy all this from the United States. So even to build this parallel system, they need American technology, innovation. I mean, this is another thing that people overlook. The Chinese never invented anything. The only thing they can do is copy and paste, which is fine, but they don't have an innovative sense of invention and entrepreneurship. It's a cultural thing. You can say it's good or bad. I don't judge anyone, but they're not going to have like a Silicon Valley that can develop technology. So all the BRICS in some way need America and the West in general. And hopefully in the future there can be some more intelligent politics, because a lot of how all this is presented is very antagonistic, like West versus East. But
right.
But really, the United States has a foundation of technology and financial technology, financial intelligence that China needs Wall Street basically even to build their own financial system, because they need to understand derivatives, how markets work. I mean, it's not easy for them to create the yuan to be a global currency, and they're doing it. And how are they doing it? They're sending their students to American universities to study finance. They have joint venture companies and working with American banks, which are in China, and some Chinese banks on Wall Street. So it's a bit of a paradox to say that the BRICS are going to somehow create something that will leave the Western system in the dust, because they're actually feeding off the Western system and using it as a template to their benefit.
Mm-hmm. The simple country boy in me says that this scares me to death, this whole business. I mean, because getting back to the whole notion of fiat money, I mean, we're basing this on feathers and fairy tales. It just is.
Yeah.
It's crazy. And you make the statement in your book that banks need the economy, but the economy doesn't need banks. What do you mean by that? Did I get that right?
Yes, it's exactly right. What it means is, let's say that I like to use the example of a local community where you have your local butcher and your local baker, and Walmart and big corporations have kind of put small town mom and pop America out of business. But if you manufacture something, like if you make shoes or you make computers or even you make bread or you make food or you're a farmer, if let's say you're a corn farmer, I'm in South Carolina surrounded by farms, and all these corn farmers produce corn and they sell it on the market, but they produce something. So if you make corn, you really don't need a bank. You can take your corn to the market and you can trade it for other things you need. You can sell it, you can store it, you can eat it, worst case scenario. So you don't really need a bank. But a bank needs a real business, because otherwise what would a bank do? Even if you just look at lending business, banks need to lend money to people who want to buy cars and they don't have money. So banks don't really, banks need the real economy. Banks need farmers. Banks need people to have mortgages on their house. And banks are in some way, I don't want to compare them to zombies or like that they're a virus, because they do serve a purpose. If you want to buy a house, for example, and you don't have $500,000, the bank will give you a mortgage, and so they serve a great economic purpose. So I'm not against banks, but if you look at things in reality, like a practical, realistic analysis, farmers, people who make things, anything in the real economy does not need a bank. You can have a different system. You don't even need money. You can barter. You can make your corn and trade it for other things you need. But the banks, they need real businesses to lend money, and because banking is completely artificial. Money isn't real, whereas corn and other things are real. The timber industry is real. You need wood to build things, and so banks try to make this distinction very fuzzy, as if they're needed, but really they're not. They are more like a convenience, and we've become very addicted to it. Just like any convenience, it's a lot easier to go get a loan or use your credit card rather than waiting for the time when you might have the money. And they're a wonderful convenience of modern society, and they're necessary, especially for a country like America to have a global empire. We need a sophisticated banking system. But at the end of the day, they rely on real people who make things and the real economy. So they can't exist sort of by themselves in a void.
You're listening to Destiny Survival Radio, and I'm John Wesley Smith. My guest today is Joe Gelet, author of Splitting Pennies, Understanding Forex.
What about things like Bitcoin and some of these other electronic currencies? Is this just another version of electronic fiat money somehow?
Well, Bitcoin is interesting. I thought it was not so serious at first, but every day it becomes more and more credible. Now all the big banks have decided they're going to make their own Bitcoin, which will probably be like a world currency, which could replace the U.S. dollar maybe in 10 or 20 years as a global reserve currency. But the difference with Bitcoin, well, there's a few differences, but most importantly, the U.S. dollar is created by the Federal Reserve Bank, which is a private bank. It's owned by banks and bankers. It's not connected to the U.S. government. That's a big fallacy. But they have a license that the Fed was created by an act of Congress, so it's connected to the government. But the Fed itself is private. It's owned by the member banks. So the Fed is owned by J.P. Morgan, Merrill Lynch, Rockefeller family, Chase Bank, and so on and so forth. There's no conspiracy. That's just, the banks needed the Federal Reserve, so they created it for themselves. The Fed itself doesn't make any money. So it's not, even though they have an unlimited supply of money because they can create as much as they want, the Fed itself doesn't have a profit. What it does, it enables the member banks to make a huge profit. So why do these Wall Street banks make such huge profits? Because they have an unlimited source of free money. What do they do with the free money? They need to use it, but they don't have to give it in the form of loans. They can invest it in stocks. They can trade commodities, and they do all these things, and so they're very profitable. Bitcoin is different because Bitcoin uses a form of encryption to create a currency which is based on this mathematical encryption algorithm. And so there's a finite amount of Bitcoin. And in the beginning, you would actually mine these Bitcoin, that you could create them out of nothing by a software process. But there's a limited supply of these Bitcoin, but it's not backed by anything. But the question with Bitcoin and cryptocurrencies is, will they be accepted? So the New York State allows merchants to accept Bitcoin. You can have a license in the state of New York. So if you have a restaurant, you can accept Bitcoin, and it's allowed and it's legal. So Bitcoin has become popular because you can use it. So the question with these cryptocurrencies is, will they be widely used? And the answer is yes. The banks will use cryptocurrencies, but probably they'll make their own. So even though Bitcoin was the first, they're going to come out with their own currencies, like let's say like the JP Morgan dollar. And it might not necessarily be connected to the United States. This is very similar to, before the Fed, there was something called the wildcat banking era in the United States. It's funny that the current generation of Americans don't really know much about Forex, because around the time of the Civil War, there were thousands of currencies in the United States. There was the South Carolina pound and the Massachusetts dollar, and there were private currencies. So you had the Rockefeller dollar and the JP Morgan dollar, and you had worthless currencies. You had the Bob Jones dollar that people would try to use and it wouldn't work, and it was just complete anarchy. And that could be one possible scenario with the cryptocurrencies, because any currency is only as it's good as people will use it. And the U.S. dollar, being backed by the U.S. government effectively with the military and with the whole financial system and the whole U.S. economy, which is still the biggest in the world, has a huge support behind it, whereas Bitcoin basically doesn't have any support, but people like it because it's secure, because it's electronic, because it's an alternative, because it's completely anonymous. You can carry it with your phone or on your, keep it on your computer. So it has all these advantages. So it's slowly taken time to get credibility. So it's not a fad. I think that people will use it, but it needs to become, at some point, there needs to be a critical mass where it will become mainstream. So when you can go into Walmart, let's say, and use Bitcoin to buy your groceries, or wherever is your grocery store, then it can be considered to be like a serious currency. Whereas, and it's getting, every day it's more and more widely used. And there are now other currencies other than Bitcoin. There's Litecoin and just a number of other currencies, and some of them have even failed because of hacking and different things. So it's really still in a testing and development and environmental stage. So we're probably only at the very beginning of a revolution in cryptocurrencies that may take really 50 years, let's say, to work out all the bugs. So in the near future, I don't see on the horizon any one world currency or really any alternative to the U.S. dollar system, because it's just so widely used and accepted. And banks have always been really slow moving in technology. I mean, in my business, in Forex, only in the last 5 years has algorithmic trading become commonplace. When I started developing algorithms, there was only a very small number of places where I could trade algorithms, and the tools were very limited, and banks are always much slower than other businesses to adapt technology. So, and the big banks control basically the whole money market. I mean, the biggest point in the Bitcoin market is where you exchange Bitcoin for U.S. dollars, and that's where the banks can basically put a Bitcoin operator out of business or enable them to flourish. So if, for example, you could go into Bank of America and exchange your Bitcoin for U.S. dollars immediately with no problem, obviously it would be very popular. So, and that'll happen. That'll come. The banks are moving in that direction. It just takes some time, and with regulations on top of that, everything is on the long term.
Yeah. Well, that to me makes Bitcoin sound less revolutionary than what it was purported to be initially. But that's just my thought on it. Tell me what you think about the future of the dollar. I mean, you sound fairly optimistic. You know, we hear all the time, you know, people say, well, this event's going to crash the dollar. It could happen in May. It could happen in September and blah, blah, blah. What's your take on that?
I think a lot of this that you read and hear about the crash of the dollar, they don't understand the mechanism of global banking and Forex really well, because I think they're all correct. I think that it's exaggerated and sensationalized. I think the dollar collapses every month. And I think that this is a measure of inflation, as we started talking about, and that's what I try and explain in the book, which is that the dollar is constantly going down in value, and there's constantly pressure when they create new U.S. dollars that it becomes less and less valuable. As far as a single day where, let's say, the value of the dollar could go down by 50% in one day or something like this, I don't think that that's physically possible, because the way that Forex works, when you trade the dollar, you can't just sell the dollar. You have to buy something else. So when you trade the dollar against the euro, you're selling the dollar and you're buying the euro. So if, let's say that this happened theoretically, that the dollar crashes in one day, that would mean that the euro and all these other currencies would go up. So my argument to that is you can just trade Forex, and that's your solution. And that's what we offer with our business with Fortress Capital, is hedging and managed accounts and investment accounts. And so my argument to any talk about the dollar collapsing or the dollar being in a good situation is that Forex is going to be an investment of the future, because whether the dollar goes up or down, it doesn't matter to an algorithm. So if the dollar collapses, it's a great trading opportunity. So you're not making money from someone's misery. You're just basically protecting your asset value. And let's say you have a savings account of $100,000 and the dollar crashes and it becomes $200,000. So all you're doing is you're staying at zero. You're not really making money. And that's a big thing that people don't understand compared with stocks. Whereas when you invest in stocks, you're actually investing in something, in a business, and you hope that it will grow. Whereas with currencies, the game is to not lose. So I think that it's exaggerated that the dollar could completely collapse in a day or even in a year, because that money has to go somewhere. So where is it going to go? Is it all going to go into Bitcoin? Is it going to go into gold? Is it going to go into real estate? Is it going to go into euros, into oil? Money cannot evaporate. It's not possible to make dollars disappear, except maybe through some Fed magic. But if, let's say that the Chinese sell all their billions of dollars in U.S. dollar holdings, they must sell it, and then it must flow to some other asset. So that means something else is going to go up. And a lot of these dollar collapse ideas say that gold will be one of these assets, which I agree with. I think gold will go up, but gold isn't a solution for everyone. For example, gold cannot run a modern world economy. So let's just use one business as an example. If gold was the only money in the world, McDonald's would not exist. Because can you imagine people going into McDonald's and paying with gold? It's not practical. So we need something like the dollar. So if the dollar is going to collapse, we really need to have an alternative. Let's say like a Bitcoin. So if there was something, let's say like a gold-backed Bitcoin that existed like an alternative, then I would agree with this and say, yeah, probably the dollar will collapse because everyone's going to start using this other system. But currently there's no better system than the dollar. So I'm not bullish on the dollar. I don't think the dollar is good. I'm just practical. There's not any other system to use, and all the other assets have already been inflated. So real estate, gold, physical commodities, coffee, corn, whatever you pick, they've already been inflated because people do sell dollars because they're so worthless. So I think it's more of a long-term thing that the dollar is slowly going down. Then one day we'll wake up and it'll be some sort of something like a science fiction movie. But no matter what happens, there's hundreds of different ways that investors can protect themselves from such a situation. So it's all manageable. So it's nothing to be afraid of. I think a lot of it has a bit of a doom and gloom aspect to it, and I try and stay away from that because I don't think the world's coming to an end. I mean, it's just changing. I mean, there's been times throughout history where there's been some events that have dramatically changed the world, and so the end of the world probably means the beginning of a new one. So, I mean, it's possible, a meteor could strike Earth and every human on the planet could die, but what's the chance of that happen? Maybe one in a billion. And that's the case with the dollar and with the financial markets. There's going to be, the powers to be are going to have some system to operate their machinery and their global empire. It's not going to, North Korea can't launch a missile and wipe out all this infrastructure. It's not practical. So there's going to be some solution. And until now, there hasn't been a real alternative to the dollar that would make such a situation really, I think, possible. But the markets will be volatile, for sure. All markets will be volatile. I mean, we're certainly on the precipice of a huge financial catastrophe, but it's really going to be volatility. That means markets will go up and down, and you can see the stock market crash. You can see, real estate prices collapse. The rent market will evaporate. So it'll be a wild market, but businesses will still continue. It's not going to be the end of the world, I don't think. I mean, it's possible, but I think a lot of this is exaggerated because of these reasons I've outlined. So if anyone is worried about it, I just encourage them to look into solutions and making an opportunity out of a possible calamity, which is what I do. So,
well, I like what you have to say.
Opportunity.
Yeah, I like what you have to say about if it's the end of the world, then it's the beginning of a new one. What should the average person, maybe who can't get into investments, prepare for? Should they try to buy some silver coins, some gold coins? I know there are these little, I think I've heard it called carrot gold or something like that, where they're, little minuscule parts of gold coins or I don't know what it is exactly, but, is gold and silver the way to go? Is storing food the way to go? Is kind of a hedge against inflation, or what do you think about that?
I think I put a lot of thought into it because of all the popularity of such different scenarios and how to prepare, and especially with the food supply. And one thing that we always told investors who don't have money to invest, the best investment, if you only have $1,000 to invest, is buy a bunch of long-term storage canned food, because food inflation, it's almost guaranteed you can make 20 or 30% a year if you invest in food. And if you need it, you can always eat it. So it's a great investment. So I think all the prepping and prepper movement is a wonderful thing. Even if none of these calamities happen, as many people suggest that they will, that doesn't mean you shouldn't prepare. Absolutely, you should have supplies, whether it be food or ammunition or tools or gold. I think that gold and silver tend to be over exaggerated in how useful they are. For example, if I had a lot of gold and silver and none of my neighbors do, it's going to be very difficult in a end of days scenario to trade with them, because there's only going to be a limited amount of people who have large amounts of gold and silver. So you've got to consider that, what are you going to do with your gold and silver should you really need to use it? So like a part of an investment portfolio, absolutely, you should always have 10, 20% in precious metals. And if you don't have a lot of money, silver is always a better bet. But there's all kinds of precious metals. There's rhodium. There's uranium, if you can get your hands on it and store it. I mean, there's all kinds of valuable things. If you don't have a lot of money to invest per se, I always recommend the best thing that you can invest in is energy and tools, whether it be a machine that can make something, power tools, hand tools, things that maybe don't work on electricity, things that maybe will have value, and alternative ideas for a survival situation. I wrote in some article about prepping that one of the best tradable investments would be bottles of alcohol, like let's say whiskey. So let's say that the system is not functioning and we only have food for a limited time until the factories start working again, that, for a year, let's say. People will be able to grow marijuana or corn, but it's not easy to set up a still and make vodka or whiskey. So if let's say you wanted to trade and barter in an end of day scenario, the best thing to have is small quantities of alcohol, and it lasts forever. It doesn't go stale, and you can trade it in small amounts for food and things that you need, and people are not going to stop drinking. They're going to need it. It's always going to, people will want some whiskey 10 times more than they'll want a bar of gold, for example, in that scenario. And right. It's kind of funny, but if you think about it practically, or if you ever just imagine some of these movies like The Postman, one of my favorites with Kevin Costner, or some of these where there's like an apocalyptic situation, something like that, of course, weapons, guns and things, but something of value like that is going to be easy to trade for things that you might need. So the thing is really not so much a specific, there's not, I don't think, a magic bullet or a panacea. It's important to understand the markets and how they operate and how value works, and to create a portfolio of a little bit of this, a little bit of that, some tools, of course, some food, because for yourself and your family, some gold and silver, some paper money, some U.S. dollars. A lot of even big institutional investors have been hoarding cash, like physical cash, because banks have been imposing fees and negative interest rates. So there's a number of things, but it's, of course, always particular to your situation. So depending on where you live, how you live, are you employed? Are you retired? Are you a student? There's all these things. And that's one thing I love about the prepper movement is it basically teaches people to learn and be prepared. And how I ended up contacting you, I thought, I read all these prepper sites, and there's a lot of really good information, especially some really innovative ways to create energy from simple things in your house. And I've seen all kinds of interesting things, but there's not a lot of information how to be financially prepared. So I thought this is where I could provide a bit of a niche, and the book is a great place to start. It's only $6 on Kindle, and everyone gets a free strategy. But what I'm selling with the book is understanding how the markets work, not so much a particular investment strategy. I do have strategies, and I want people to open accounts with me, but if they understand it, they can do it for themselves. You don't need to open a managed account with my company. You can learn how to do it yourself, and I have known and know people over the years that don't have a lot to invest, but they trade Forex and develop algorithms and, make a living at it. So there's all kinds of different ways that people can fill their own niche. If you have a particular skill, maybe you're a craftsman, it's just about exploiting your own talents, no matter how you look at it. But the financial aspect, you just want to understand what is really money, because in any kind of prepared scenario, you want to just be able to trade and store value, and that's what money provides us. And every year the dollar is just less and less valuable. So it is collapsing a little bit every day. Just you have to be financially prepared. And of course, like anything, you want to become educated as much as possible as a first step.
Right. Very good. Well, we are out of time. We need to wrap things up. Any other additional closing thoughts, Joe?
I think I summed it up with this last part about being financially prepared is more of a state of mind and some ideas. But I think that all the idea of preppers and prepping is really no different to be financially prepared than to be prepared for some EMP or different kind of, let's say, bird flu or different scenarios that you might stock up on a food supply. You just want to apply the same thinking to your portfolio and your investments, whether it be $1,000 or $1 million. The thinking should be the same. So I hope that some people can get something out of that. And at the end of the day, I think a lot of these theories about some of the scenarios that may happen, I think they overstate sort of the negative aspects of things. I think generally, even if there is some, no matter what the calamity is, people will find a way to trade, and whoever is prepared for that scenario will be able to capitalize on the opportunities better for themselves and their families. So,
well, Joe, I will have a link to your book in a blog post that I do about our conversation today, and I want to thank you so much for being on and being so informative. This has been really interesting.
Thank you. It was a lot of fun. Thank you for having me.
Well, my guest has been Joe Gelet, and we've been talking about the book called Splitting Pennies, Understanding Forex. And that's going to do it for this adventure in Destiny Survival Radio. Lord willing, we'll do it again soon. In the meantime, keep prepping.
Thanks for listening to Destiny Survival Radio. Your support of the affiliates and advertisers at DestinySurvival.com make this show possible. Views expressed are those of the host and program participants and do not necessarily represent the views of Destiny Survival sponsors. Until next time, think survival.